All right, good morning, everyone. Let's keep going. Sorry, I'm running a little bit behind. Maybe a little bit limited in what we're going to show you on the charts, but let's keep going. All right. Last night's session, the S&P, nice reversal there, and all the U.S. markets really led by the NASDAQ. You could see there it was always outperforming the rest of the markets. We finished up close to 0.5% on the NASDAQ on the session. And I think S&P probably being weighed down by some of the banks and some of the oil counters, but we've got a hell of a lot to look out for over the near term. Obviously, the big thing tomorrow being the ECB. Not that we're wondering if they're going to do QE, just wondering how much and all the other things that go into it. One of the things that we continue to see right now is this the oil price that continues to stagnate at the moment, and we continue to see the gold price push higher. That's really been a extremely common theme over the past, call it start to the year. So we're going to have to we'll have to continue to see what happens here. I think that the global central banks are throwing stimulus and kind of in currency wars to an extent. So it's this ultra low interest rate environment that's really got gold kick-started again. And the interesting thing is that it's doing nothing for the rest of the commodity space. So we'll watch that going forward. If you look at Asia overnight, we had a really strong session out of Australia in particular. I mean, Shanghai obviously making up some of the losses that it had the other session when they took away the ability to give additional leveraged accounts a couple sessions ago. But Australia very strong on the session. Some of the mining stocks actually bouncing, maybe following on the back a little bit on what we saw in London yesterday. We had Anglo's up about 3%, Billiton up almost 2% on the session, and so seeing a little bit of follow through there. One of the things that we also are going to continue to watch is obviously the stock market in China, and how easily we can just regain the levels that was already at. I mean, this one thing it's been such a disparity between the actual economy in China and the stock market there. It's really interesting to see how one can go and the other can't. And it continues to last for longer and longer. Obviously, that's not going to last forever, so I'll have to see how it ends up playing out. Moving on into the chart of interest on the day, saying where are the bears. Basically, RIDEX Bear Fund assets are reaching an all-time low at the moment. One of the other things you can look at right now is margin lending in the S&P at the moment is literally at record highs. You've got a poll taken by B of A that I saw that was out yesterday has over 2/3 of fund managers are expecting markets to outperform this year, equity markets to outperform this year versus all the other asset classes. So you are starting to see quite a lot of complacency around, even though we've seen a lot of nervousness over the last couple of weeks. I myself have become quite bearish because of some of the asset price volatility that we've seen and some of the strangeness of what we've seen going on, but very few bears that are actually out there at the moment. Right. Corporate action today. We've got SAB Miller with their third quarter sales release out today. You can see there all the numbers that are expected. We've got U.S. Bancorp, which is coming out in the States. We've got eBay. We've got American Express. We also have MediClinic, which was cut to underweight versus equal weight at Barclays. All right. Let's get into the maps. Okay, so we're going to keep this one a little bit short today. First thing we're going to look at is light sweet crude. So what's been real interesting to me, this is a year chart. What's been incredibly interesting to me is that you've got the oil prices continue to come down over the past, obviously 6 months or whatever, but over the last month we've really got there, and we've kind of set in this 40 level, as you can see on the maps here, for the basically almost the whole beginning part of the year. And to me, what's incredibly interesting is you've got so many things that are happening right now, like BHP Billiton. I'll jump and look at this in a 30-minute real quick. We've got BHP Billiton, and that came out this morning saying that they're going to drop their shale rig count by up to 40%. And you've got who was the other? Was it Schlumberger is cutting 7,000 jobs? I think it was Schlumberger. Across the board, they're all coming in. They're cutting spending. They're taking rigs offline, and what would be essentially normally quite bullish for the underlying, and it's just gotten no traction. I find that so interesting, and the fact that we kind of look like we've dropped a little bit out of this little bear flag that we've just made. Almost seems to me like we can actually come a little bit lower. So I'm not 100% sure that this move is totally over yet. I don't expect a really quick snapback either, simply because of the fact that there's market's been in contango now for quite a long time. There's a lot of supply that's been bought and been stored going forward. So that supply will be coming back onto the market, not too far out into the future if prices start to rise. So for me, this is a real interesting setup that we're in at the moment, and I think that we could see lower for a little bit longer in these things. I don't necessarily think that the price action, it just doesn't look very bullish, even with what should be some bullish news that's coming out for oil stocks at the moment. I mean, Sasol this morning, if I'm not mistaken, B of A said should be buying Sasol here. But you've got Sasol, which yesterday basically made a classic gap fill here, which you can see. When we drop down below this 392, 393 level, we came back up and we tested it. We basically closed at 394 or something like that, I think, on Monday. And only to yesterday, there wasn't an uptick. The U.S. session opened and it started to trade up a little bit, but for the rest of our session, there wasn't even an uptick. So I really think that we will come back down and test these recent lows. I wouldn't be surprised if we come even further, even lower, because I know that at this price, oil price, and then this Rand price, that Tesla's not really making any money, or they're making very little. So just keep that in mind. That could continue to go on for a little bit longer. All right, next one we'll look at is Anglo's, also kind of making a classic gap fill. I would obviously there's the gap filling. We can look at the same thing in a 30-minute, but there's a couple levels to really look at here. This, I think, was where we really broke down, was somewhere there, maybe call it 201, 202, but the real gap where we gapped down so hard that one day came up yesterday, was filled. We actually closed below it, and I think or right back on it. And I think that potentially these things can continue to follow a little bit further. If we don't, anytime you're having asset prices and anything that is falling this sharply, this fast, and there's no real snapbacks to the upside, it just kind of has gotten down here and it's been sitting and consolidating. That's usually pretty bearish, and price action usually means that it's going to come a little bit lower. So don't be surprised if all of these if some of these commodities do fall a little bit lower, and some of these commodity stocks follow them a little bit lower. So other than that, I will say that the market action globally at the moment is looking very bullish. I don't know if it's just up until the European Central Bank announcement tomorrow, and maybe it's a bit of a buying the rumor, selling the news. I really don't have the answer for that, but the bottom line is that the price action global markets right now is very solid, looking quite bullish. And that's it for today, guys. Thanks a lot.